Hey everyone, this is Michael, and this is the Stock Picks video for February 27, 2022. Before I start, I just wanted to say that the content and information in this presentation is provided for educational and informational purposes only, and in no way should be considered investment advice. So we're going to go ahead and just talk about the current market environment, and then look at we don't have any current positions. We got stopped out of the last of them last week. But we are going to take a look at the stocks on our ready and watch list. So let's go ahead and get started. So first off, we continue just to be in a poor market environment. I feel like a broken record just saying the same thing every week, but that's what the hand we're dealt, and so that's where we are. Our risk level is red. We're just not seeing a lot of stocks setting up. The ones that have been commodity related, especially a lot of oil stocks. And of course, we've gotten a lot of volatility last week, and volatility is not your friend in terms of stock investing. We do like to see a movement, of course, up once you buy, but that's not really considered volatility. We want the volatility to be quieted down before we buy, and then we want the big moves up. We don't want the big moves up and down, because then the risk of losing money just is much higher. But we're not seeing that. We're just seeing a lot of volatility in stocks. We're still seeing many growth stocks just getting pounded, week after week. Even though we're getting some huge moves up, especially on Thursday and Friday. But these are all beaten down stocks that are just not anywhere near buying. So that's something normally that's what we're looking for. We're looking for the best growth stocks in the market. And unfortunately, for many months now, those stocks are just off our radar. They're just all beaten up and they're in the hospital, some of them, and they're getting triaged and getting ready to, maybe some of them can go home and recuperate and maybe ready to come out again. But most of them are months away from that. So that's where we are. We did get the big up day on Friday and Thursday. As I said before, we're just not jumping in. There's just not a lot of setups that are nice and clear and low risk. So we're just remaining disciplined. We don't look at the stocks, even though we see huge moves in like Zoom and PayPal. But those are we don't bottom fish. And look at what's happened to a lot of the people over the last year. In a lot of these stocks, the bottom fishers come piling in, and they just get their heads handed to them as the stocks continue to make new lows and lows. At some point, they will be right, and they won't go down anymore, but they may not go up much either. So as the market has to digest all that selling, and also you end up what's called overhead supply. So you have a stock that maybe came down from 100 and now it's 20. And so you have all these people that bought from 100 all the way down, and now they just want their money back. And so as the stock starts rallying from 20 to 25 and 30 and up, you just have all the supply of sellers who are like just trying to get some of their money back. And that has to be worked through, and that doesn't usually happen in a few weeks or even months. Sometimes it takes a good year or so to work through all that. And also the stocks need a lot of good news and to be able to power higher when you have losses like that. So that's something we don't look at those stocks. We're always looking for the best leaders in the market, the ones that are making new highs, especially when there's a correction, and which is what the stocks we've been looking at. It's just not been an easy market for those, just because the overall market's been pulling them down. And again, we've talked about there's been a lot of rotation. We get one sector, especially oil and gas, that starts to break out, and the whole sector starts going, which normally in better times, you're able to buy them and the stocks just go and you're not tested. But we've just seen over almost a year that they go up and the sellers are out there, they're selling to all rallies. And you have a lot of just reversals, breakout failures. A lot of times the bases would fail, and it just hasn't been working. So that's led us back here to our strategy, is just you're selling into short moves, because the longer moves for the most part just have not worked. And we just try to, usually around 10%, we've been taking some money off the table, or if not all of it. So really, it's been just a short-term trading environment, which is not ideal for our system, or just for most people who don't want to be that active, but that's the market we're given. So we've had just very little exposure. The good side, though, is while the market has been down, NASDAQ was hit down 20% on Friday, or Thursday. I'm sorry, Thursday. I think our picks, we're down. I don't even know if we're down. I have to look. But if they are, it's very minimal, maybe 1% for the year. So we're outperforming the market, but a lot has to do because we're just not doing much. But that's part of investing. You only want to invest when the odds of making money is on your side, and it just has not been for quite some time. But the good news is that eventually, whatever correction we're in, if it's wrapping up now because of the big moves, or maybe it comes later, months from now, or whenever it is, all in all, at some point we're going to have a fantastic buying opportunity when the market changes its tune, and we will be able to just be able to go back to a really nice stock market environment where we can buy stocks and they basically will head higher on balance, and it becomes much easier to buy and make money. So we're sort of still in the wait and see mode. One thing I just wanted to show, just along those lines, we're still in a bear market. The NASDAQ, the percentage of stocks, NASDAQ stocks above the 200-day is still very low. We're only 21%. So if you reverse that, you have 80% of stocks are below the 200-day moving averages, and that's been going down for a long time. So just that's kind of in a nutshell what's been going on under the surface. So let's go ahead and take a look at the stocks. So give me 1 second. I'll be back. Okay, so let's start with the first stock on our growth ready list, and that's Navio's Maritime Partners. You can see this. This is a daily chart, and you can see in the end of 2020 we had a huge move in the whole shipping area. They're a Greek international owner-operator of shipping vessels, especially dry bulk commodity vessels. So we had a huge move. We're talking went from under 6 to 34. That's the kind of move we love to get. It wasn't ideal, even looking at it back here. I'm sorry, we're actually on the weekly. We'll say on the weekly. It just kind of just went straight up. It probably didn't give us a lot of places to buy it. So here's the daily. I don't have it on this chart, but we'll come back to the weekly at another time. But you can see we've had a number of bases that just kind of formed, and now we formed another cup with handle, and we broke out on very nice volume on Friday. So we're right in the middle of the buy zone. So this is actionable. We've been stopped out, I think it was 5 times in a row, just because, again, the market has just been pretty poor. We're kind of staying out. Depending what happens on Monday, we might pick this one back up. Sometimes we'll buy it like a pullback buy. It might come back a little bit and then reverse and come back up. So we're going to watch this. It may just take off without us, and so be it. That's what happens. A good example of that was one that we just took off the list, and that is General Dynamics. This was one it was acting really pretty well, and it came into the buy zone. We had it on our list, and then we had the huge drop down. In my personal account, I got shaken out, and I hit my stop, and I was out, and then it just reversed and just went screaming higher without me. But that's, again, what happens sometimes. So this one, it was a tricky one. The market got really, it just wasn't acting all that well, though when you look at the chart, it looks like it was acting fine. But in the environment where most stocks were going lower and lower, and of course on the opening on Thursday, nobody knew that the market was going to reverse, right at the open and just scream higher. So these happen. This is what happens. It's part of investing. So this one took off without us, and there'll be many more. So 1 second, let's go to the next one, which is Cushman and Wakefield. This one too, you can see there's been a lot of volatility right around. It tried to break out, it failed. It actually went down to the loss zone. So probably it would have kicked you out. It also broke below the 50-day, but again, it reversed and went higher. So this was one we weren't in, but it's just gotten very volatile here. We don't want to see the volatility on this right side. We want to see it, coming down. In fact, you can see over here, we're a little of a channel here, and it got tighter and tighter and tighter. And here you can see the volume came down, and we were really just trading pretty tightly, and then we broke out. That's a nice breakout we like to see. Unfortunately, because of the market, this breakout failed, and it just came straight back down and got more volatile. So that was one that just wouldn't have worked even if you got it. But that's what we like to see. We're not seeing that over here. We're just getting a lot of big moves. So again, we're in the middle of the buy zone in the lower part, so that does look pretty good. But we'll just watch it. It's again, these are the strongest stocks in the market. We're at RS of 96, and it's not so much we're always trying to buy the 99s, which we always look for, but sometimes they are just not set up correctly, or they've already broken out and they're just extended, which we don't buy, or they're just in no kind of a chart pattern that's buyable. So that's why we haven't been finding a ton of stocks that look like they're at least in a buy zone. Here we are in a flat base, but we don't like the volatility that's going on, so that's sort of keeping us out. And we would have, even buying this, we would have probably walked away with a loss on that one, so which we're trying to avoid. So let's move on to, that's it for our ready list. A bunch of stocks fell off of it, and I think we're down to 6 or 7 on the watch list. Okay, so let's start with the first stock. It's the highest RS rating, and it's a Wave Dancer, and the ticker is WAVD. It didn't have a nice close on Friday, but we are getting the RS blue dot, which we always love to see, which is showing that the stock is outperforming other stocks while still in the base. So the relative strength is moving higher. But this was a bad close. We had a pretty big move. It's also an inexpensive stock. We tried to not buy stocks in the $4 or $5 range. Institutions don't really traffic in these stocks. So, but anyways, it's one of the few IPOs that's been holding up relatively well. So we've put it on our list. We'll see what it does. Hopefully it starts to tighten up, close to this high over here, and we give us a chance to buy it. It's also kind of on the thin side, even though if you look at it, you can see there's been quite a lot of, big spikes on the blue side, which means that there's showing that someone's accumulating the stock more than they're selling it. So this was just not a good sign too. We had high volume, and we, were over 5, went down to 4. So it's not a fantastic looking chart, or being a pretty small. This is a micro cap, $57 million stock with not very many shares. So I put this on the risky side, but it is holding up pretty well. And being an IPO, there's really very few that look like this. Most of them are just, starting up here and ending down, down here. So we'll continue to watch it. If it continues to break down, we'll take it off the list, because it just didn't perform as we were hoping. So the next one is International Game Technology. This one's RS is 96, so it's holding up pretty well. It's acting pretty constructively. You can actually see, we had another base here. We had a nice breakout. This was the spot to buy it, because you can see we came down in the base. Actually, I can't move this without my recording getting off, so we'll have to just live with this here. But you can see we formed a base, we came down, and then we started to form a nice little tight pattern here in the bottom of the base, and then we broke out. And that was the spot right here to buy it. And then, because you can see when it came up to the top of the base, it never formed anywhere to buy it. It just kept going. So it makes it difficult. So really, this was the spot to have bought the stock. And then we had a pretty decent rally. Then, of course, the market pulled it back in. But you can see that we've come down. We had a move here, 32 to 22. And we came to 29, and we came to 23. And then a little bit higher, 30. And so you can see that these waves are getting tighter. We have a move here, and then we had a smaller move here, and then we're getting a smaller move here. So we like to see this. It means that the sellers are being absorbed, and they're not coming to market as much. And we're still watching this one. Our buy zone is 30.84, so right above this. But we don't like the fact that it just breaks out straight up after 3 days. We'd like to see this same kind of tight trading right below 30.84 or so, around there, and then a move out. So this is what we're given. This is why we're getting so much volatility. Other thing too, we might just hold off on this. Likely is that earnings are in 2 days. You can see it right here, and we don't like to buy it in front of earnings. So it's been, again, it's been tricky because there's always been one or two things that you're like, oh, the stock looks pretty good, the chart looks really good. Oh, but earnings are in 2 days or 1 day. So all in all, it's a very tricky, difficult market, which is why most people have not been doing very well at all in it. So let's take a look at the next one, Methanex, ticker MEOH. They produce methanol. Now this one is actually forming a pretty good chart. And let's take a look at some of the things that we like about this chart. So first of all, you can see down here we have all the earnings and sales for the last 4 quarters comparing to the previous year's quarters. And fantastic earnings and sales. We're up. You can look at here. The company earned $2.43 versus 15 cents a year ago. The sales, 1.2 billion versus 811 million. So really strong earnings and sales. This was triple digits here. These have been triple digits. The margins are increasing from 8 to 9 to 9.1 to 14.5. So this company is firing in all cylinders. PEs, we don't look at PEs, but it's low. It's still a small cap, under 4 billion. It's got a decent amount of shares trading, so that's good. It's not too thin, and it looks pretty good. And we're forming the handle part of a cup. The handles are really nice to see because they it shows that the buyers have pushed it up here, and of course sellers come in, but you don't want to see a lot of sellers. And if you do see them, you want to be just low volume, so not really affecting the price. And then we're starting to see buyers come back in. So our buy zone is 51.20, right above there, and it goes up to 53.76. Yeah, right around there. So watch this one. It's getting close. Ideally, again, we'd love to see almost like a miniature cup with handle form. It gets close to that and then kind of gets a little tight area, and you'd see a little miniature cup and handle within the cup, bigger cup and handle. That's a great sign. Many leaders have ended up with that kind of a pattern. So this is probably one of our most promising ones. Looks like Wave Dancer is kind of not acting as we'd like. IGT is earnings are just a couple days, so this is our top contender. So let's look at the next one, Capri Holdings, one of the few companies not in cyclical. They produce and market women's and men's accessories and apparel and footwear. This one, it used to be a flat base, but it's gotten more volatile. And we don't like the fact that we're starting to see high volume here on the right side. It's been trying to break out a couple times, pulled back. So we're right just below the buy zone. So we'll see what happens. We don't want it to come just screaming higher. We always like to see some kind of a little pause on low volume that shows we're back up where the sellers used to be lurking, which is, if you just draw, you can see right here in this dotted line, right around 69.25 to 69.5. Here you can see it got up to 72. Sellers have just, the buyers haven't been able to push it past there, and the sellers have just been appearing to push it down. So we want to see, we'd love to see the stock, be hold around the upper 60s, the lower 70s, and not be pushed down again. And then when a little bit of buying sometimes is just enough to push it higher and we break out of this zone. So we're watching this. Fundamentals are pretty good overall. We have over here, you can see the company's having a breakout year. It was for going back to 2015, we were earning roughly between $4 and $5 a share. We dropped down after COVID, and now we're going up to $6, and then it looks like we're heading higher. So the company's been able to turn itself around with pretty good earnings and sales. So this is something that could be a nice winner coming up in the future. And earnings are not till May, so we're doing pretty good on that. And the earnings just came out here, which caused it to gap up, but it hasn't been able to make much headway since then. We just have a few more. We'll do them pretty quickly. But I also like to give you kind of some color on, what we're looking for in the stocks and trying to get the best stocks that we can find and the best low risk spots to buy them. So Ryan Specialty is an IPO, again one of the few that looks is actually heading higher, RS of 94. It's a little early on this one because you can see it's pretty volatile. It's pretty big moves. We've come down, we came back up. Now we got last 2 days from pretty big moves. This move alone was actually it wasn't that big. It was only 3.7%. Just because the scaling is not that big, it looks like it was a really big move. Sometimes you see these and it was like a 12% move. Again, we'd like to see it tighten up right around the top of this range where the buyers haven't been able to push it past. So it's a little early, but that's why it's on the watch list. Good earnings and sales. It's a relatively new company. Good overall ratings. So we're watching it. Looks promising. Just a couple more. Next one is Carlisle, and they make roofing systems and braking systems and other friction products. Not quite sure what that is, but they're listed under diversified operations. It's industry group 49 out of 197. So we're in the top 25%, which is good. We have the blue dots here. Again, it means that the stock is actually outperforming. The relative strength line is outperforming, and while we're still in the base. Normally you'll see a stock would break out, and ideally the relative strength line breaks out along with it. You can see over here, we kind of broke out to this little consolidation here for a few days. Again, nice tight trading, and then it came out of there on earnings. And the relative strength is it moved to a new high. So here we're not quite at a new high, even though it looks like it on this chart, but the algorithm is saying it's not. But we're still in the base. So again, we want to see it tighten up here. We don't want to see it just come flying out of there, because you don't want to buy something that just a few days ago was 220 and now you're buying it at 250. It just needs some time to consolidate. Just the risk of the stock correcting is normal after a big run, and it wouldn't be doing anything unusual, and yet it would probably kick you out with a loss. So we're going to watch this one. Again, pretty good earnings and sales. We've come back from loss 4 quarters ago, and we're now solidly positive with 60% earnings growth and 39% here for the sales over the previous 4 quarters. Looks pretty good. And our final one is a healthcare stock. So we do like to see a little bit of diversity. We don't want to see just all oil stocks, though that sometimes happens. So this one, very good ratings overall, 97 out of 99. It's got a very strong growth rate, 52%. It's been a little volatile. It hasn't been a fantastic strong mover. Tends to break out, consolidate, break out, kind of make a new base. Had a decent run, came back down. Here we undercut the previous base, so we're in the base 1, stage 1, which is good. And we formed a little bit more of a V almost, which is not ideal. So again, we want to see this get close to up there, tighten up the trading, and not give us all the volatility. We would love to see something like this over here, where the volume drops down. It shows that there's not a lot of sellers lurking around at this price. We'd love to see it right around there and break out. It's made, a pretty strong move over the last few days. So this was up, that was up 3.5%, and this day was up, actually shows only 1.18%, but it's because it dropped down so much and came all the way back. So those are the best stocks we're able to find at this point. Of course, as you know, if you've been part of the service, we're always adding new stocks on a daily basis and taking things off that are just not performing or just not as good. So we'll continue to do the work and give you guys the best situations. If we see something in the market looks like it's improving, we might tip our toe back in the water with a purchase, maybe a half position, just to see what happens. But I'd really like to see a lot more stocks set up and start to break out, and ideally, and really importantly, that they start working. So we're not getting all the volatility, and we're just, the breakouts are just strong and don't reverse on balance and kick us all out. So that's it. We'll be back next weekend for another video. Okay, happy trading. Thanks.